private student loan rates drop. What this means for you. Great news for students looking for financial aid. Private student loan rates have taken a dip. If you're considering a private loan for your education, now might be the perfect time to lock in a lower rate and save money in the long run. Fixed rate loans. See a significant drop. Over the past week, the average interest rate on 10-year fixed-rate private student loans fell to 6.19%. Just a week ago, it stood at 9.12%, making this a significant reduction of nearly 3%. Compared to last year's 8.77%, today's rates are far more favorable, offering students an opportunity to borrow at a much lower cost. For instance, if you were to take out a $20,000 loan at the current 6.19% rate, your monthly payment would be approximately $224, and over a 10-year repayment period, you'd pay around $6,874 in total interest. That's a huge improvement compared to what students were paying last year. Variable rate loans, also trending down. If you prefer a variable rate loan, there's good news for you too. The average 5-year variable rate loan has dropped to 7.09%, down from 8.92% the previous week. Unlike fixed-rate loans, variable rates fluctuate over time, meaning they can increase or decrease depending on market trends. They typically start lower than fixed rates, making them an attractive option for those who plan to repay their loans quickly. For example, if you borrowed $20,000 on a 5-year term at 7.09%, your monthly payments would be about $397, with a total interest cost of roughly $3,812. But remember, since it's a variable rate, your payments could change over time. Why consider a private student loan? While federal loans should be your first choice due to their benefits and borrower protections, private loans have their own advantages. Higher borrowing limits. Federal loans have annual borrowing caps, but private lenders may allow you to borrow up to the full cost of attendance, minus other financial aid received. Flexible application timeline. Need additional funds in the middle of a semester? No problem. Private loans can often be applied for and approved throughout the year. Quick disbursement. Some lenders can process your application and disburse funds within a week or two. Competitive interest rates. Borrowers with strong credit can often secure lower interest rates than some federal loan options. Minimal fees. Many private loans have no origination fees, administrative fees, or even late payment penalties. Deferment and perks. Some lenders allow you to postpone payments while in school and offer perks like forbearance options, career counseling, or even the ability to skip a payment. Options for international students. Unlike federal loans, which are only available to U.S. citizens and eligible non-citizens, private loans may be an option for international students studying in the U.S. Smart borrowing tips before taking out a private student loan. Make sure you do your homework. Consider these key factors. Compare rates and fees. The interest rate is important, but don't overlook origination or late fees, which can add to the overall cost. Check repayment flexibility. Look for lenders that offer deferment, income-based repayment options, or temporary forbearance in case of financial hardship. Understand the loan limits. Some lenders impose yearly borrowing limits, while others allow you to take out as much as needed. Borrow wisely. A good rule of thumb is to borrow no more than what you expect to earn in your first year after graduation. This keeps your debt manageable and reduces financial strain later. Final thoughts. With private student loan rates at some of their lowest levels in recent months, now could be a smart time to secure financing for your education. Whether you opt for a fixed or variable rate loan, make sure to compare your options and choose the best fit for your financial situation. Happy borrowing, and best of luck with your studies.
For full video, click related link below or like and subscribe this channel.